Hello everybody and welcome back to the channel. Today we're going to be taking a look at SoundHound AI and we're going to see if it will be a good investment to add to our portfolios. Now they are a voice artificial intelligence company funded in 2005. They are headquartered in Santa Clara, California. They provide a voice AI platform that enables businesses to offer customized conversational experience to consumers. Now as you can see, the current stock price is $9.43, and if we take a look down here, the 52-week low is $3 with 50 cents and the 52-week high is $24.98. So we are a little bit far off from both. Now also, by taking a look at this chart, you could probably start asking yourself what the hell is going on. Why is this company selling on and dropping off? Which is exactly what I'm about to tell you. Before that, let's take a quick look at the market cap, which is 3.49 billion, and also let's take a look at the 64% it has done in the past year, which is very good. Keep in mind, this is an AI company. Every AI stock or the AI sector or the growth sector in general in the stock market is kind of high at the moment. So I am expected to see a little bit of sell-off in all of the stocks. If you take a look around here, Nvidia, quantum computing, everything is pretty much down. So this is why I'm looking into opportunities for this stock, but that does not mean it's a good investment. So let's take a look at the numbers. The main reason why the company is selling off is because in a recent filing by Nvidia on February 14th, the company revealed that it has sold its entire stake in this company, SoundHound AI. Ever since then, obviously the shares of SoundHound have been free falling, correcting from 32% from its February 13th choosing price. So please keep this in mind. From February 13th to the 14th, it dropped 32% just because Nvidia got rid of the company. Now, does this mean it's a bad company? That's why Nvidia got rid of it. Does it mean that it won't be profitable? Or it just means it doesn't fit Nvidia's investing style or their needs anymore? Since we are not financial experts, or at least I'm not, let's go ahead and take a look what the Wall Street analysts are saying. For this stock, they have it at a buy rating of 4.28 out of 5. 7 total analysts in the last 90 days, 4 buys, 1 buy, 2 holds. Now, before we take a look at the intrinsic value, let's see their forecast intrinsic price, or their price, sorry. So you can see the average is about 13.36 and then the high of 26. Now, in their earnings report, you can see that they have been positive throughout 2025. They will be positive, sorry, but that does not mean they're still profitable. These are all negative EPS, as you can see, 0.07, 0.095, which is a negative 35%. This was in Q4 2024. Maybe this is why Nvidia got rid of it. But as always, I like companies to make more money throughout the years. And as you can see, from December 24 to 2025, they have decreased their EPS, in this case from negative 38 to negative 25, which is a positive. And the revenue from December 24 to December 25th, it will increase from 83 million to 165. It is expected to increase. One thing to keep in mind though, since this company is constantly growing, usually when you want to invest in companies that have intrinsic value, you want them to be a value investment. In this case, this wouldn't be it because it's diluting his shares. Usually you want a company to be buying back their shares. This way your shares are worth more because you will be owning a higher percentage of the company. So you can see they have been increasing their shares issued throughout the years. And again, going back to the earnings, as you can see, they have been very negative in the past. But as you can see, they are starting to get rid of that negative EPS little by little. Their financials are obviously going to look terrible since they are reinvesting in this company and using more money to operate to hopefully get better in the future. One thing to do keep in mind, their net income was negative 77 million in December 31st, and it was negative 91 million in December of 2023. This is not good. Usually net income should be increasing in terms of the positive, not increasing when it's negative. And that, to add to that, is very weird because their operating income increased from 66% to 64% from 2020 to 2023. Yes, somehow their net income decreased as well, which doesn't make a lot of sense to me. The free cash flow, I can understand being more negative because they might be using more of their cash to invest in the business or just operate in general to hopefully be profitable in the future. This I understand, but having less operating income expenses but then your net income decreasing doesn't make a lot of sense to me. This is why I have yet to invest in this company. Now, one thing to keep in mind is they do have more assets than liabilities, which is good. And I mean, looking at the overall free cash flow efficiency, guys, as we just saw, last value was negative 90 million, 3-year average is negative 78, and the free cash flow margin is negative 135%, which is kind of off. And taking a look at the company's numbers, whether it's the operating income, net income, the return on investment, the only thing positive here is the gross margin, which is very high, is good. But again, this is just a new company in a sector that's expected to explode in growth. There's a lot of hype, so this is why this is like this. But But as you can see, the rest of the company is just not profitable. So what you've all been waiting for, let's go ahead and take a look at its intrinsic value. First, we gotta see what the earnings growth rate will be in the future, which is 25%. So we gotta put the stock ticker SoundHound. Then we got to add the 25% growth projection. This is original Graham formula, the updated one, and then the current analyst revised. I barely use this one. It's too conservative. As you can see in all of them, it is negative. This stock shouldn't be priced this high just because it doesn't meet the numbers and it's not making profits. The only reason the stock is up is because of the hype in the sector. One positive this company it has been increasing its revenues, as you can see, from 7 million all the way now to 67, and their gross profit as well. But as we just saw, their net income wasn't positive. After seeing all these numbers, after seeing their intrinsic value negative, what do you guys think? Is this a play for the future? Why do you think Nvidia sold off on this stock, and do you think it will have an impact on the future of the company in general? Please let me know in the comments below. I would love to hear your thoughts and opinion. And as always, if you enjoyed the video, please consider leaving a like and don't forget to subscribe.